Hey guys, welcome back to Coffee Cafe. This is where we left off. We finished everything up on June 10, so now we are on a new day for June 11. Okay. We're starting on a new page as well. General Journal, page 4. Okay. So let's see what happened here. Okay. In this case, we received a bill from LV Remodeling Co. for remodeling the store job. Okay. Then it says right here that the total amount was $18.90, right? And it was invoice number 754, due in 4 days. Okay. So here we received a bill. All right. If we received a bill, what does that mean? And it's due in 4 days.
We have a bill to pay.
Okay, so good. So how do I record that?
It's not accounts payable, right?
It is.
Okay.
Okay. What else?
So is it similar to Kim Robinson's bill? The same process?
Yes. Yes. However, this one, we hired LV Remodeling to do some work. Okay. So in this case, LV Remodeling is indeed a third-party vendor, and they're doing some work on the store. So in this case, I want you to recognize this as a subcontractor expense. Subcontractor labor expense. Right? Because we hired them to help out and build the store. So I'm going to treat this as a subcontractor expense.
So it's under the labor expense, correct?
Yes. Okay. What account number is subcontractor expense?
6510.
65,100. Okay. For how much was the subcontractor expense for?
$18.90.
Okay. And then because we received a bill, we're not paying it now, we're paying it later, we're going to recognize accounts payable. Which is account number 20,000. Okay? Since we're not paying it today, we have all the information that we need to build our description. Okay? So in this case, we're going to say LV Remodeling because that's the company we worked with. We received the invoice number 1754. Okay. We have the bill due in 4 days, so net 4. And this is for interior design for store. Or you could do store.
have a question for you.
Yes.
So I noticed on this one we don't have a PO. When are you in this scenario? When are you using purchasing orders? Just for material or furniture, or what's the guidelines of the purchasing orders?
Purchase orders, you can technically use it for anything that you're purchasing, for anything that's a fixed asset or a current asset. Now this is us. We don't.
Mm-hmm.
It's hard to explain, but purchase orders, right? You
Mm-hmm.
would not likely use it to order like things
Labor.
like labor work. Yeah. You would more use purchase orders for more tangible assets like furniture, like you said. Um,
Or maybe
furniture.
like the coffee or the cups or
Correct. Inventory items. It's usually purchase orders is mainly for purchasing inventory. But in this
mm-hmm.
case, I just want you guys to practice that we can also use purchase orders to purchase fixed assets as well.
Okay.
Mm-hmm.
Thank you.
Yes.
This is basically for services, right?
Yeah, you did. Yeah, you can't really use a purchase order for services.
Yeah.
Yeah. But, you could, but it's just not as common. Just because you could get a quote if that's like I think that's the most similar thing that you could do for a purchase order is get a quote. Um, but you wouldn't really use purchase orders for services. You would mainly use it for like assets. Okay. There you go. So now that we finished our journal, right? We need to go to our subsidiary ledger. Okay. So we have a subcontractor expense. So make your way to operating expenses. So it is under labor expense. Here we go, subcontractor expense. Okay. This one, it's up to you what you want to write in here. I'm going to write remodeling store. Um, invoice number 1754. Reference number GJ4 now because we're starting a new one. And this is going to be for an increase on the debit side by $18.90. So therefore, my running balance should be $18.90. Okay. And let's see.
I'm sorry, I'm lost. Are we on the general ledger?
Yes.
Okay.
Yes, because we finished our journal. So the next step is to do the ledger.
Okay, thank you.
So here, now that we finished going down the line in our journal, next thing we have to do here, now that we completed our subcontractor expense, we're going to go ahead and fill in our liability over here so we know how much we owe in grand total. So liabilities. Here we are at accounts payable. Right? This was invoice number 1754. That's all you need. General journal number 4. And this time we need to credit our account by $18.90. Right? Once we do that, it's going to recalculate to say that now we owe $13,753.90. Okay? Now that we finished our ledger, because we only had 2 accounts to put in there, next thing we have to do is update our subsidiary ledger because we need to record the bill. Okay? So exactly like we've been entering bills in general, right? This was LV remodeling. There you go, LV remodeling. All right, 6/11. We received a bill, okay, for remodeling interior, or I guess remodeling store for interior design. Okay. Invoice number 1754. This transaction happened on the 4th journal. Now, did they give us terms?
No, but we do have a due date.
No, but we do have a due date. They didn't give us a discount, but they did give us a due date. So the due date is net 4, right? They said this bill is due in 4 days. So we could skip the discount due date. However, we need to calculate or figure out what the actual due date is. So in this case, when is this bill actually due?
What do you do?
I believe it's June 11th plus 4 days.
But the date's supposed to be June 10. This transaction happened in June 10, right?
I know, we moved on a new day.
Okay. Sorry.
No worries. Nope, this is a brand new day, so it is June 11th. So therefore, it's going to be due on the 15th of June. Right? No prepaid amount. We didn't have to make a down payment. But the invoice amount was for $18.90, which we didn't make a payment to or yet. So, once again, formula is going to be your invoice minus your prepaid minus returns minus discounts minus payments. Okay. Now this formula right here, where I'm telling you to take the invoice and then subtract everything, you can go ahead and apply that formula to every single vendor that you see here. Okay? Because that formula is going to stay the same, and I'm just reiterating it every single time so you guys can understand. But you can go ahead and take that formula and do it for every single table that you see here. So you could go equal invoice amount minus prepaid minus returns minus discounts minus payments. Okay? So in this case, I owe LV Remodeling $18.90. Right? Down here, I already have an auto sum. All right. Everyone good?
Yes.
So that's that transaction there. Okay. Next, we hired Irene Jameson to work for the store. Okay. So what Irene Jameson does is she's going to get paid $8.50 an hour. Okay. With no extra benefits. So because she's just a part-time worker, or in this case, I think she's supposed to be a full-time worker, but right now we can't afford any benefits for her. So in this case, she's going to be scheduled to work 40 hours per week, and from Friday through Tuesday. So she gets Wednesdays and Thursdays off. Okay, and she works to start on the 14th of June. Okay, so right now it's only the 11th. So today is Today's a Tuesday. So she's gonna start this Friday. All right, so she's scheduled to work on the 14th. Payroll period is bi-weekly. Okay, so this is where I'm gonna be introducing you to either the payroll tables or the employee section of the subsidiary ledger. In this case, all we did was hire Irene Jameson, and she's going to start to work on the 14th of June. Right now, all we did was hire her, so we need to at least record the stuff to hire her. Okay, that's it. Okay, nothing else there. She didn't start working, nor did we pay her, because we wrote that she is going to be working as a bi-weekly, so her paychecks is going to come every Friday. Okay, if you actually checked on the calendar, right? Just a little quick here, if we go into the calendar here, I've also set that Fridays, right? The first payroll period the first pay date that we do payroll is on the 14th of June. So right here, Irene Jameson, we hire her. She's going to miss that pay date, but that means she's going to claim her first hours on the 14th of June. All right. Now, once again, how bi-weekly payroll works is that the pay date starts on a Monday and it ends on the second Sunday. All right? That's usually what the time frame is, and we need to give some extra time so we can make payments by Friday. So that's the way that I'm going to be working this pay sheet, is that that she's going to claim hours, right? Starting, this week is going to start on the 10th, and it's going to end on the 23rd. But so far, she's going to be at least to be able to claim for Friday, Saturday, Sunday, Monday, Tuesday. So she can claim her first week already. Okay? So with that being said, I'm going to go ahead and introduce you to the employee section of the subsidiary ledger. Okay? Because even though she's not working, she's going to start to work. We need to make sure that we file everything for her. So if I go ahead and head to my subsidiary ledger, I have employees. But if you are using the Word document, it's a separate worksheet called payroll. Okay. So here we are. This is the payroll worksheet that I've created, so it makes it a lot easier to calculate federal income tax. Okay. First things first is the pay date. So we're going to make a payment to her on June 28th, right? 2 weeks from the 14th, since she's not going to she's going to start working on the 14th, so she can't claim the pay date, the pay hours on the 14th. She started working that day. So the next pay date is going to be June 28th because the payroll period just started. Okay. So that means she's going to get paid on June 28th. Right? The employee's name, right? First name is Irene. Last name, Jameson. Okay. Pay rate, we're only going to give her $8.50 an hour. Okay. Now, because she hasn't started working yet, she has not claimed any hours. So again, this is going to be when she submits her timesheet in. This is where we start filling in everything and we start calculating her payroll, right? So that's all the information that we need is just this line right here. Okay? That we just hired Irene Jameson. Done. Okay? So she is a classic W-4 worker, W-2 worker. Okay? And that's all we have to do for Irene. Okay? All we have to do is just make sure that we make our note that she is working on the 14th of June, or she starts to work on the 14th of June. Okay. All right. So after that, we decided to hire another person, but this person is going to be a sales representative. So in this case, right, this person is going to be a 1099 worker, independent contractor, because their sole purpose and sole task is to sell our products, right? Straightforward, just a regular sales representative. So that means they are entitled to come into work whenever they like, all right? If they don't have any customers or clients or jobs to do, then they do not, they don't need to come into work. They're going to be based off of commissions, which is 10% of sales, okay? So right now, because we're starting off slow, that is our goal here is to give 10% of every sale that we earn, okay? And benefit deductions are going to be from commissions, which in this case, right, they're an independent contractor. No benefits or deductions are going to be offered, okay? And then work to start on the 17th of June. So pay date is going to be the same as the payroll period. So this person is also going to get paid bi-weekly, all right? But this person is going to start on the 17th of June, and their job is just to do a sales representative job, okay? That's all that they're responsible for, okay? Okay, So if this person is a 1099 worker, let's go back down to the subsidiary ledger. We have a spot for him. This person, Albert, does not belong onto the employees list because they are an independent contractor. We don't care to be responsible to pay for their tax benefits or anything like that. However, we are paying him based on commissions. So we have a commissions worksheet right here, okay? And this person's name is Albert Allen, right? And their only job is to collect 10% of sales. So the more he sells, the more money he'll make. The less he sells, the less money he'll make. Okay? So here, nothing that we need to add here. Okay? And he doesn't start until the 17th of June, which is, if you looked at the calendar, it's our grand opening date. Okay? So there we have our workers. Okay? All right. Now, it is now the 12th of June. It is Wednesday. And here, we are going to pay $85 for a half-page newspaper ad to run from the 15th of June to the 20th of June. All right? And it's going to be in the Las Vegas Register Journal. Okay? So again, and this time, we're finally going to use our business credit card. Okay? Now, let's think about this. First off, what did we buy?
Advertisement.
We bought some advertisements. So, in this case, let's take a look at my chart of accounts. Do I have anything that's in regards to advertisements?
Yes, advertising expense code 60,000.
Perfect. So, we have some advertising expense. Okay? Now, let's take a look at this real quick. In this case, what else is, so we're having it being done on the newspaper, right? So in this case, we bought $85 worth of advertising expense. Okay? And how did we pay for it?
With a credit card.
With our credit card. So in my chart of accounts, do I have a credit card account? In this case, right? What is a credit card to me? If I use it, what happens?
You have to pay for it.
You have to pay for it, but do you have to pay for it now?
No.
No. So what does that become to us?
A liability?
It becomes a liability. So in your liabilities account, is there anything that looks like a credit card?
I'm sorry, what was the question again?
In your chart of accounts, under liabilities, is there any account that looks like a credit card?
Visa payable.
Visa payable, right? Because we got National Bank Visa Gold credit card, all right? So in that case, we need to, since we're going to start using our credit card, our very first credit card transaction was that we purchased advertising expense. So in this case, we're going to recognize, right? Because if we use it, we have to pay for it, but we're not going to pay for it now. We're going to pay for it later. So in this case, right? Visa payable is my account. And account number, I think it's 22,000. Right? How much should I charge my credit card for?
The full amount?
Which is
$85?
$85. Okay. All right. So now that we paid with a Visa credit card, okay, and we have all the information here, you could go ahead and fill in the rest of the description here. So we dealt with Las Vegas RJ. Okay. No invoice number or anything like that. Okay, but I could put that this was for a half-page newspaper ad. Okay. I don't need to write that I paid with a Visa credit card because I've already indicated the account right there. So all this that should be good enough. Right? Just the vendor and what this transaction's for. Okay? So at least you indicate what that advertising expense is, which is for purchasing half a page of a newspaper article. Okay? So now that I completed my journal, right? Next step I have to do is I need to update my account because now I have a starting balance in both accounts of my advertising expense and my liability of my credit card. Okay? So if I go back to my ledger, first thing I have to recognize is advertising expense. Oh, wrong form. So here we are. Operating expense. Oop, there you go. Very first account at the top of your operating expenses. Here we have it. It is June 11. Our first advertising expense is going to be for a half-page newspaper ad. Okay. Post reference, general journal. This happened on the 4th journal. Okay. And it was for a total of $85. So therefore, my running balance for my advertising expense is going to start off with $85. So that was my advertising expense. And then we finally used our credit card. So as I've mentioned before, right? We're going to make payments. Every time we use our credit card, we owe National Bank money because it's a National Bank Visa credit card. So here we are, Visa payable. Okay. Our very first transaction, right? 611. Now here, right? This is where if you want to, you could either put the vendor name, you could put what the item is or what the note is here. Now, if you've ever seen your, credit card statement, it kind of only tells you the transaction code number and where you actually purchased this item from. So in this case, right, I want to actually be a little more descriptive so I know exactly what this transaction was, because your credit card is not going to tell you. Your credit card's only going to tell you the transaction number and where you made the purchase from. Okay? So in this case, I have to go a little extra and say that I bought a newspaper advertisement. Okay? So same thing here. I'm going to write newspaper. Okay? Post reference, right? We know that this is on General Journal number 4. And because this is a credit, because we're increasing a liability, we are going to increase my liability by $85. So therefore, I should have a credit balance of $85. Right? Okay. Now, because we dealt with the Las Vegas RJ, we need to go ahead and put that information in there too, in case for any reason that they don't run the newspaper ad, we can go ahead and tell them, hey, I already paid you, right? And here is proof. So I'm going to go to my vendors, okay? And this is the Las Vegas RJ. So there it is, Las Vegas RJ. Couple tables down. And then this is to run a half page okay. Invoice number, there wasn't one. Okay. General Journal, once again, is 4, right? In this case, right, we just went there and we just paid them. So obviously there's no terms because we paid at time of service. Or at time of sale. So in this case, the minute that we were quoted, we paid right away. And in this case, you could also indicate here that this was paid with a Visa credit card. Okay. And once again, so there you go. Invoice amount was for $85. And yes, we used a credit card, which in this case, right, acts as if we paid for stuff. Okay? But this time we don't owe anybody except for the credit card company. So in this case, right, we owe
nothing.
We owe nothing. Good. Because we used a credit card, which acts as if it was a payment. So we owe nothing. Okay? And that's all we have to do for our subsidiary ledger. Right? No real bill is really done here, but you should definitely record any business transactions in case you need to return or et cetera, et cetera. Right?
So how about on an account payable? So this transaction doesn't have to be recorded on account payable?
Well, in this case, this wasn't a bill because this one we paid at time of when we purchased the item, right? So in this case, we purchased advertising expense and we paid it right then and there. So we're not having an accounts payable really happen because when we use a credit card, it's as if we actually paid for it. So we don't owe them. We owe the credit card company.
So it's a separate transaction for
Correct. It'd be technically separate, yes. Mm-hmm. Okay. So that was our very first advertising expense. Okay. Let's see what happened next. Okay. So here we decide to order 2,000 advertising flyers, okay? Which cost 5 cents each flyer. And we had city printers print them out. Now, because we're not going to pick it up right away, city printers wants us to pay a 50% down payment to make sure that we are going to pick up the flyers and that they are going to proceed with the job. Many places, especially something like this, right? They don't want to waste their paper, their ink, especially if you're ordering 2,000 copies. They don't want to make this this order just so then when you come back to them or you just fail to pick them up, at least they're getting something out of it and that they're not going to take a loss. So in this case, they just want a deposit or a down payment here to ensure that they want that we are committed to this job and that we want these 2,000 flyers. So this basically ensures that that we want them to complete the job. Okay? So in this case, right, we're not picking it up today, but we are going to pay for that 50% down payment. And we paid it with a business credit card. So in this case, right, so we only paid for half. Now let's think about it, right? 2,000 times 5 cents, right, gives us a grand total of $100. Now we're paying 50% down. That's just $50. And we're going to use our business credit card for this. Okay? Now again, what was that account that we normally use to represent our down payment? And that it's going to go towards the bill.
Prepaid account.
Prepaid accounts. Okay? Which I think it's account number 18600, right? Because that's the account we frequently use. Okay? And right? So we have prepaid accounts and we use a business credit card once again. So in this case, I'm going to be recognizing another Visa payable transaction, which is account number 22,000. So in this case, what was the down payment amount for? $50.
$50.
Okay. All right, so there's $50. And now we can finish our description because we have everything that we need, right? Here, we dealt with city printers, okay, for 2,000 flyers, 50% down payment. Okay. You don't need to indicate that you use your Visa business card because the account is already clear. Okay. So once again, we didn't pick up these flyers. We're just ordering them. And then the next couple days when we pick them up, you are to pay for the rest of the bill. Okay. So there we have it. Okay. So once again, when you finish with your journal, we do need to go back to our ledger. Now in this case, why did I not indicate that I have advertising expense?
Not advertising space because you have to advertise it yourself. You're just getting a printer, right?
Well, no, we had a professional printing place to print it out for us. Right? City Printers is a like a photocopy center place. Why would
Oh, sorry.
go ahead, answer.
You haven't actually incurred the expense yet, right?
Good.
So
Good.
when it's done, you'll apply that deposit towards that expense, right?
Correct, right? Right now, we ordered it, right? And they just required a down payment. That's it. We didn't pick up the flyers. We don't actually physically have it in our hands. So it's not considered an advertising expense yet. We haven't incurred the bill yet, or we haven't picked up the flyers yet. We don't have the items yet. This is a prepayment. So that is correct. So in this case, we're going to go to our assets because that's what a prepayment is. It's like a voucher, right? And then when you go pick up the flyers, that's where you redeem your voucher. Okay, so let's see. Here we are, prepaid accounts. Okay. In this case, it is the 12th of June, and I'm going to go ahead and write down payment on 2,000 flyers. Okay. General journal, once again, we're still on 4. And we increased our accounts, prepaid accounts, by $50. Okay. So therefore, that should increase you to now $6,704.17. Right? Right? We increased our prepaid accounts with a debit. So therefore, it increased my account balance by $50. Okay. And then let's see what else is on our journal here. We have a Visa payable. So therefore, we need to go to our liabilities account right here. The last transaction we did was a Visa payable account. So there you go. And this time I'm going to put down payment on ad flyers. Okay. General journal number 4. And once again, we're increasing our liabilities because the more we keep charging, the more we owe National Bank. So in this case, we are going to increase it by the $50. Okay? So this is where we need to put our formula in here to reflect our account balance. So once again, this one's going to be equal up 1, okay, plus left 2, okay, minus left 3, okay? So in this context, right, it's telling us that we're going to take our previous balance, we're going to add any credits that happen, and we're going to subtract any debits that happen, all right? And therefore, we should have a running balance of $135, okay? So once again, we're going to go previous balance plus your credits on the left side here, left 2. And we're going to subtract any debits because debits reduce liabilities. So in this case, I'm going to subtract 3 from the left because once again, this column right here is where you're going to be entering in your debits and your credits on in from your journal, and your running balances are going to be in these 2 columns. So once again, you get 135, and you could drag this all the way down to the end of the table, okay? Because we will be using our credit card quite often, okay? So I'm going to go ahead and pull it all the way down to the end of the table, except for the gray, of course. Okay. All right. So right now, I currently have a credit balance of $135, and that's how much I used on my credit card. Okay.
Excuse me, can you go back to your assets?
My assets, the prepaid.
Is that where you put the 2000 right there? It's under prepaid.
I am under prepaid right now.
Where you put the last transaction, it wasn't under checking. Can you scroll to the top on the asset part? Oh, prepaid account. Okay. All right. Thank you.
Okay. If you're talking about the advertising expense or the credit card usage, that's a liability. In this case, I have to record both ends, so then our balances match at the end of the journal. So in this case,
Okay.
I need to do I need to do the prepaid for the advertising, and then I need to go down to my liability account to fill in my credit card information. Okay, so you have that one, right? And your liabilities for your credit card is $135.
cannot drag it down that 135 all the way down. I keep hitting enter. It's just a blank on my rows.
Okay, so you might be accidentally trying to just move that cell down. So if you look on your cell very carefully, you have that green little, it looks like, to me it looks like a square, but it's a triangle apparently. And when you put your mouse on there, if it becomes a black plus,
I got it now. Thank you.
that's when you can go ahead and drag it down. Okay. Mm-hmm. Okay. Everyone good now?
Yeah.
Okay. So now we're going to go back into, so we need to go to our subsidiary ledger because we made a prepayment for city printers. Okay. So let's go ahead and go to city printers on your vendor section. Okay. Right, in this case, we're going to make a note here that we had to make a down payment on flyers. Okay. 2,000 flyers at 5 cents each. Right? And you used a Visa credit card to pay for it. Okay. We haven't received the invoice yet because we haven't picked it up yet. And because we're paying at time of service, no terms or anything there. Okay. And once again, post reference, we know it's General Journal 4 because that's where the transaction has happened. And in this case, like I've been teaching you, right? In this case, we're going to act if this was an invoice amount or this was the receipt amount, okay? Which was for $50. When we actually pick up our flyers, that's where we're going to use that that invoice amount for $50 and we're going to place it under the prepaid amount. Okay? But for now, we're going to recognize that they billed us or they required us to pay $50. Right? And we did pay with a Visa credit card. Okay? So once again, formula is invoice amount, subtract any prepaid, subtract your returns, subtract your discount, subtract your payments. So therefore, right now, we do not owe city printers anything, right? We paid for whatever we needed to pay for. Now, they owe me service because this is a prepaid account. Okay? All right, so is everyone good now?
Yes.
Yes.
Okay. So that was it for that transaction there. Okay. So here, we finally start the new day. I'm sorry, no, we're still on the 12th. What? Let's see. Okay, we're still on the 12th. Okay, so Wednesday the 12th. And what did we receive? We received our inventory. Now, what kind of inventory did I purchase?
Perpetual moving
Perpetual.
average.
Good, right? We bought the regular coffee, which is going to be, we're going to treat this as perpetual moving average. And then our supreme coffee, which is going to be our perpetual FIFO. Okay? So, with that being said, like I mentioned before, I've already indicated everything you need in the inventory worksheet. Okay? But since this is perpetual inventory, let's take a look at what my bill was. Okay? So, in this case, right, the total came out to be $362.50. Okay? Now, if this is perpetual inventory, how do I journalize perpetual inventory? Oops. Edit undo. Okay. How do I receive perpetual inventory? Or journalize perpetual inventory?
So it should be inventory. In this case, it would be coffee.
Good. All right, let's take a look at my chart of accounts. What is the specific account that I have? And what account number? Okay. I have a regular coffee and I have a supreme coffee. Okay, 12.20 and 12.40. So in this case, that's exactly what we're going to do. We're going to recognize it as inventory. Okay. So therefore, I have an account for regular coffee. And I have an account for supreme coffee. And I received a bill with terms. Okay. So if I received a bill with terms, what does that tell me? Am I going to pay for it now? No. So in this case, what account do I need to associate me paying this coffee on an account?
Accounts payable.
Accounts payable. Okay. So the regular coffee was 12.020. Supreme coffee was 12.040. And my accounts payable should be 20,000. Okay. Now, in this case, right, how much was my total for my regular coffee?
$168.75.
168.75. Good. How much was my total for my supreme coffee? $193.75. Okay. So therefore, my grand total that I owe for this bill is $362.50. Right. Good. Now we have everything that we need here, right? We know exactly who we bought this from. Okay. In this case, it was Atlas Coffee Importers. Okay. This was invoice number 315. Okay. we have some terms, right? We will get 1% discount if we pay within 15 days. If not, the whole bill is due in 30. Okay? You don't need to specify what you purchased here, right? That'd be something I would save for the general ledger. Okay. Okay, so there we received our inventory. So, very next thing I have to do is I need to ensure and verify that I received this purchase order, right? Because I ordered coffee. So in this case, right, I did receive my coffee. It was invoice number 315. Okay. Okay. So, as I've mentioned earlier, we're going to go ahead and update our our general ledger. So this is where I'm going to complete, more details in each item that we purchased. Okay, so in this case, assets, right? We bought some inventory. So here we are, regular coffee. And I'm going to indicate the date is the 12th, right? Items. We purchased 250 pounds, right? You don't need to write coffee because we're already in the coffee account, so it's kind of clear that you are purchasing 250 pounds. Okay. Now post reference, right? Once again, this is general journal number 4, and we're increasing my account by $168.75. All right, so that means my beginning balance is going to be $168.75. Okay.
Are you separating both of them?
Yes, because we have one.
Different prices?
Yes, we have different.
Amounts?
Well, not different amounts. In this case, did I say 250? Oh, you're right. We only
It's
bought
200.
120. Yeah, we only bought 125. Right? We only bought 125 pounds. My bad. Thank you. So yes, you're gonna separate them because one, they're different 2 price points. That's correct. And 2, we are going to calculate the cost per item, or in this case, we're going to calculate the cost of goods sold differently, right? They're both perpetual inventory, but one is we're going to do moving average and the other one we're going to do FIFO. So in this case, we need to keep them separate because we need to keep track of both of them, right? You're going to notice that we're probably going to sell out the regular coffee more so than the supreme coffee.
And you said throughout this spreadsheet, we're going to use the balance plus credit plus debit,
Yes.
and that's going to be entered on the next entry, correct?
Yes. Just because I don't want to do it now. I'm going to wait till we get the second entry and then we can enter the formula and drag it down.
Okay, thank you.
So that's for the regular coffee. Now I'm just going to scroll right down because right below it is my Supreme coffee. All right, date is 6/12, and we purchased 125 pounds. Right? Once again, General Journal number 4, and this time we're going to be debiting the account for $193.75. So that right there is going to become my beginning balance in my Supreme Coffee account. Right? So here we update our coffee inventory accounts. Now, we need to now also update our liabilities because we received another bill. Okay? So instead of a Visa payable, right, we're going to go ahead and go all the way up to the top because it's an accounts payable account. And we're going to indicate right here that it is the 12th and that we received the invoice number 315. Okay. Once again, we are still on the General Journal page 4, and this time we owe a grand total of $362.50. Okay, which then that should bring my grand new total to be $14,116.40. Okay, not looking too good. We just keep creating more and more and more liabilities, and we're owing even more money. Okay. All right, so now that we finished our last account here on the journal, we dealt with a vendor. So in this case, we do in fact need to make a record of this in our subsidiary ledger, because what if I decide one day I need to return the coffee? Maybe they shipped me the wrong coffee. And if they did, then I have to let the vendor know, hey, you shipped me the wrong coffee. I demand a full refund, or I demand to return these items. So they can send you the wrong items at any given point. But in this case, right, we're going to go ahead and make a record for that. So again, this is Atlas Coffee Importers. Okay. And we have our very first bill. Okay. Here, I can make sure that I say that I purchased 250 pounds. Or I could say 125-pound regular coffee and 125-pound Supreme coffee. Okay. Invoice amount, once again, this was $315. Post reference, we're still on General Journal number 4. In this case, did they give me terms?
%, 15 net 30.
Good. 1%, 15, net 30. Okay? So therefore, we need to calculate what the discount due date is and also when the actual bill due date is. Okay? So in this case, right, in 15 days, right, when is my discount over?
In 27th?
27th, good. And then, if not, it's going to be due on
July 12th?
July 12th. Good. Okay. We didn't have a down payment for the coffee, but we did receive an invoice amount, which was $362.50. And once again, I didn't pay for it. So, therefore, right, if I plug in my formula for my accounts payable account, it's going to be invoice amount, subtract your prepaid, subtract your returns, subtract your discounts, subtract your payments. Okay?
Here's a dumb question. Why did we not enter the information on our cost of goods sold for the coffee?
We didn't sell our we didn't open up our shop. We didn't sell anything.
Okay, thank you.
Right now, we're just purchasing inventory. We haven't sold anything because we haven't even opened our store yet.
Okay. I knew I was going to get the answer when I asked.
No worries, no worries. So in this case, right, we still haven't opened our shop yet, so we don't need to use our cost of goods sold yet. We will be seeing it soon. Okay? Most likely tomorrow, because I think we might finish week 2 today. Okay? So there you go. Right? My formula is there saying I owe Atlas Coffee Importers $362.50 for invoice number 315. Okay. Right, if you have a running balance here, which is your equal sum of the whole entire bills, I owe $362.50. Okay. And now we purchased inventory. You need to update your inventory worksheet. So, if you guys remember that, I'm going to pull out my inventory worksheet. And this time, we purchased regular coffee and we purchased Supreme coffee. So, once again, every single thing I've already filled it out for you, right? Where for regular coffee, we're going to use the moving average and it's perpetual. Okay? So, regular coffee, right? We purchased it on the 12th of June. We're going to skip over the cost of goods sold because we haven't sold anything yet. But we did purchase 125 pounds, right? Which let's take a look at what my unit cost is. Okay? It's $1.35 per pound. So 135. So therefore, what is my total purchase expense or purchase price?
$168.75.
$168.75. Okay? Now, freight is going to be the next section. So I'm going to leave it here because we need to calculate the freight and add it into the coffee. All right? So in this case, I'm going to leave it here because we're going to come back to it in a couple minutes. So now I'm going to go to Supreme Coffee. Okay? We're going to skip over the cost of goods sold section, but I purchased 125 pounds at $1.55. So therefore, what is my purchase price here? 193.75. And once again, we're going to leave our freight alone because we're going to come back to this worksheet. Okay, so from here on out, once we start opening our shop, we're going to be using these 4 main worksheets for the rest of the scenario. So this is the constant 4 that we're going to always have. When we reach the end of the week, we need to have our financial forms there, right? And the very last sheet that we'll ever use will be the depreciation expense tables. Okay, all of those are going to happen towards the end of the week or the end of the month. So in this case, we will not touch the depreciation tables until maybe a couple weeks from now. Okay, but from here on out, we will be using all 4 worksheets. So the general journal, the general ledger, the subsidiary ledger, and the inventory worksheet. Okay, so these are your 4 constant ones that you need. Okay. So let's see what happened next. Okay. We received another bill, but what is this one for?
The shipping.
It's for the shipping, right? Because if you saw earlier, right, if you look very carefully, this company is in California, San Francisco, California. So they had to do a third-party vendor to ship out the items to me, which this vendor is also in California, but I guess they have some delivery services here. So here they shipped it out, and this is the bill that we received. Okay, so once again, we received shipment for the coffee, right? In this case, it's going to be based by pound, which is pretty straightforward. If you bought a whole total 250 pounds with 125 pounds each coffee, what you're going to do with the shipping is you're going to split it in half. Okay? Now, in this case, how are we going to record this extra cost? Right? How are we going to record the shipment for my coffees when they are perpetual inventory?
We need to build it into the cost of the items
Good. And how do we do that?
by debiting the accounts for the freight cost.
Okay, so which accounts?
The regular coffee and Supreme.
Excellent, right? Because here we remember, right, in chapter 7, perpetual inventory. Everything's going to go into inventory. So that means if there's extra cost, straight into inventory. If it's a return, out from inventory. If it's a discount, out from inventory. No matter where it is, everything that is going to be affected perpetual inventory, it's either going to all go to inventory or it's all going to be taken out from inventory. So in this case, shipping cost, right? We need to split the cost of it because we need to build it into our product so then we can claim or calculate our actual cost per item, which is going to be included to our selling price. So here we are, right? I just copied and pasted, save some time. That's the great thing about Excel is that you're able to manipulate the cells and make it work for you. So in this case, I made it easier on me to just copy and paste it, okay? Now, if I'm splitting this cost, right? What's my total cost? $62.50, right? So if I'm dividing it in half because it's based on weight, how much am I going to distribute to my regular coffee and how much am I going to distribute to my Supreme coffee?
$31.25.
Yep, 30. Yep. Okay, good. 31.25, right? I could take my 62.50 divided by 2 and I get 31.25. Okay? And how did I pay for it? Do I owe this freight line or what did I do here? How did I pay for it?
That is cash on delivery, right?
Mm-hmm. This one is cash on delivery. So in this case, right, this separate shipping company, right, is a third party vendor and all they're responsible is to ship the items and they're going to bill the customer instead of the vendor. So in this case, that's exactly what they did and now they're asking us to pay for the shipment here. And so then if I have to pay, what is the best method to use? Checking, right? Because it gives us a paper trail. So checking is what we're going to be using. So therefore, let's go to our check register. Okay. We will be using check number 1512. Okay. And we're going to write a check for $62.50. And who is this check written out to? Freight line. Okay. Right, now that we have our check number 1512, we can now update my journal because we have all the information that we need. Okay. So number 1 is the person you dealt with. So in this case, freight line. Okay. This was invoice number 482. Okay. This was COD. So therefore, and we wrote check number 1512. Okay. So now that we've completed my journal, I now need to go to my subsidiary ledger, my general ledger to update my accounts. Okay. So first thing that we have on the list here is my assets. Okay. I'm going to go in exact order. So here I am going to add my freight cost into my regular coffee account. Okay. So here we are, regular coffee. It is $6.12. And what I'm going to indicate here is this is going to be freight cost. We are still in general journal number 4. And this time, right, because we're dumping everything into inventory, right? We're assuming that this batch right here, right, because the definition of inventory is to include every single cost it takes to get the asset to the store. So in this case, I had to include the actual product itself and what it took to get the coffee to my store. So in this case, I'm going to increase my regular coffee account by $31.25. Okay. Now this is where the formula is going to also work here too. All right. You're going to go, since it's going to be a debit, normal debit balance, right? Because it's assets. You're going to go up one. Okay. We're going to add any debits, right? And we're going to subtract any credits. Okay. Because debits increase, credits decrease. So therefore, I should have a total of $200 in my regular coffee account. Okay? And once again, this formula could be dragged all the way down. Okay? Okay? So that was my regular coffee. So I'm actually going to do the same exact thing for my Supreme coffee, right? I'm going to go ahead and enter the date. Once again, this is freight cost. General Journal number 4. And for the same amount of $31.25. Okay? So in this case, my running balance formula is going to be the same. Previous, up 1, plus left 2, minus left 1. Okay? Or add your debits, subtract your credits. In this case, I have 225, and I'm going to pull this formula down. Okay? And now I'm going to go ahead and make sure that I format this. Okay. So I have $200 in my regular coffee and $225 in my Supreme coffee. Okay. And because we made a payment using our checking, I'm going to scroll all the way up to the top to my checking account. And I'm going to fill this in right here saying that I wrote a check. So there you go, 12. Check number 1512. Okay. General Journal number 4. And this time I'm going to credit my account for $62.50. Which then, that's going to bring me my account balance down to $5,689.92. Okay. We dealt with another vendor, right? Because Freightline, their responsibility is just to deliver to the coffee for us. But for any reason that we need to contact them, because they're delivering our inventory, we should record that this transaction has happened. Okay, to ensure that one, we paid for the items, and two, that in case we need to return an item, it's going to go through them. Okay? Right? I'm going to say shipping cost for 250 pounds coffee. Okay? Oops. Okay? Invoice number, which was 482. Okay? Post reference, still on General Journal 4. Now, in this case, you can't get a discount on shipping costs or anything like that. So, this whole section I'm going to skip on over, right? The billing information said it would cost me $62.50. And yes, we paid for it using check number 1512. So I'm going to indicate that I paid with check number 1512. Okay. Once again, the formula for this is going to be your invoice amount, subtract your prepaid, subtract returns and allowances, subtract your discounts, and subtract your payments. And there shows me that I owe Freightline $0, right? Because we paid the shipping cost on COD, so therefore we wrote them a check and we paid for it. Okay. Last but not least, right? We need to update our inventory worksheet. Because now we finally have freight. Okay? So I'm going to start off with my regular coffee over here. Right? The freight cost me $31.25. So therefore, what is my total cost here?
I got 200.
Good, 200. Okay. Now, in this case, right, I'm using moving average. So we only have one batch of inventory for now, but obviously we know that we're going to be making purchases continuously. Okay, so in this case, you have the choice. You want to fill in the cost per item here, but in this case, right, we're using moving average. We're going to calculate the cost per item anyways here. So I have a total quantity of 125, which cost me a total of 200. So therefore, right, because we're using the moving average, our formula that we need to keep or can constantly calculate is our average cost per item. So in this case, I'm going to constantly be self-referencing my quantity and my total cost, but the formula lies in the cost per item because once again, every time we purchase inventory, we need to recalculate the cost of the cost per item. Every time we sell our inventory, we need to recalculate our average cost per item. So in this case, my formula is going to lie here, and it's going to be my total cost divided by my total quantity, which gives me what?
160.
$1.60. Okay? Now you can drag this formula all the way down because this is the formula that we are going to be constantly utilizing. Okay. Okay, so right now it says that we don't have anything there. That's fine because as we go through each stage, whether we're purchasing or selling an item, we're going to constantly be recalculating this amount. So right now, okay, we have $1.60 if we decide to sell our coffee. Okay. Then for our Supreme coffee, right? In this case, the freight expense was the same for $31.25. So therefore, what is my total cost for my Supreme coffee? $225, right? And in this case, right, we are using FIFO. If we're using FIFO, what is my cost per item?
$1.80.
Equal this divided by the quantity gives you $1.80. Okay. Right. So because this is my very first batch, I'm going to carry it over into my inventory on hand. So I have 125 pounds available at a cost of $1.80. So therefore, I should get a grand total right now of my $225. Okay. Good. All right. And that is it for this transaction, right? We got to go through all 4 worksheets where we journalize first, we post it to the ledger, we post it to the subsidiary ledger because depending if the person, we dealt with a person or not, and then because this is specified to inventory, we need to use the inventory worksheet. Okay. So right now, it is 10:17. I'm going to go ahead and stop here and call break. So let's do 20 minutes.